Welcome back to Passionate World Talk Radio. Educate, enlighten, entertain. And this morning, our special guest is Ande Frazier, who wrote a book called Financially Free and the Independent Woman. So good morning, Ande. How are you doing?
I'm doing great. Thank you for having me.
Well, it's a real delight, number one. And number two, a lot of women listen to this station, and a lot of women don't understand really how to financially take care of themselves because they never were taught the way the boys were.
Mhm. For sure, for sure. It's amazing how even today I'm seeing, there's still a difference in the way that we talk about money between our daughters and our sons. And so there's a real opportunity for us to really look at that for ourselves and start to really change the narrative on what we're saying to our daughters and our sons about money.
I think so. And I think instead of telling a girl that your white knight is going to come riding up financially solvent, we should really say, forget about the white knight, baby. Step up to the plate and get yourself independently financially free.
Absolutely. I think there's a statement that kind of it circulates in a lot of my groups that a man is not a plan. And so it's a real opportunity for us to, as women, to really own our own ability to be responsible around our money.
So what age do you recommend that girls, for example, should be taught about money, saving, maybe bank account, allowance, things that boys are pretty much initiated into just as soon as they can join the good old boys club junior division?
Yeah, it's really interesting. When I was doing research for my book, I came across a study that I believe was done in the UK, and it talked about the different ages and how we can teach children about money. And one of the things I found really interesting about that research is that you can actually start to model good financial behavior even when children are in those, toddler years, those 3, 4, and 5-year-olds. And what you're doing there is certainly we think about having the piggy bank and they can put money away there, but what's more important during those younger years is that we start to model good behavior for them to emulate and to see as they're growing. And so things like waiting to buy something or saying, we need to save up for that before we buy it. That instant gratification that we often give young children is something that we should be monitoring, as well as our language and how we talk about money. So when we say, Mommy and Daddy can't afford that, it puts something in that child's mind that starts to stick with them, and they start to make these subtle little micro decisions along the way in terms of money. And so it's not only about teaching, girls to save money and to start to think about owning where they are in their finances, but it's also about making sure that we're modeling good behavior so that they can grow up and be thinking about their behavior around money as they're developing their relationship and their good, tactical plans.
Absolutely. And for those parents who are doubting about it, my son has 3 kids, 2 girls, which are twins, and then a little one, a boy. And the girls both have these large plastic jars called the Forever Bank. And they put all their change, or change that their parents give them, or change that I give them, and they put them in this jar, and they have to meet their parents halfway, which is what I did with my son. And the fact of the matter is they're both 13 now, and they realize if they want something, they go out and get a job. Well, what can 13-year-old girls do? Well, quite a bit in their world. They have a lot more freedom than we ever did when we were growing up during the 50s and 60s. So all I'm saying is that if you instill the notion that if you want something, you have to save for it, you're not going to get it immediately, chances are those kids will follow that rule for the rest of their lives.
Absolutely. I thought one of the things that's really interesting is sometimes we think we need to protect our daughters, like we want our sons to go out and get jobs at these earlier ages, but we think, maybe our daughters don't need to do that, or maybe we don't want them, working late at night and having to, drive home late at night. But there are plenty of things, to your point, that young girls could be doing to earn money, and we need to let them know that it is as important for them to earn as it is for their, male friends and siblings.
I think it's an important part. And also, recently in the newspaper, there was an article written about a boy, 12, 13, who needed to make money to help pay for his mom's cancer treatment. So he started a home bakery, and he has raised enough money to pay all of her medical bills. Think about that, folks.
Amazing.
Yes. So I think that if you get to a kid when they're young enough, I mean, I did it when my son was 4. He wanted a candy bar and a stuffed animal, and I told him he had to make a choice. I said, one you'll have for a couple of years, and the other one will be gone in 20 seconds. So naturally, he picked the 22nd one. And the guy who was standing in line thought I was too cruel to a child. And I said, hey, he has to learn sometime.
Absolutely. Absolutely. It's important for them to be able to make mistakes and to be able to, have to work towards something and earn something and recognize the real value of money.
Now, when do you start explaining? I know what age I explain to my son, but what age do you recommend explaining credit cards, line of equity, loans from the bank, going to buy a car and paying for financial service so you can make payments? Because this all is also all tied up in being financially independent.
Yeah, I think that when they're teenagers and they're starting to be approached with even credit cards. I know that my daughter, even in early high school, was getting letters from, banks and credit cards asking her to open a line of credit. I did teach her a little bit about checking and being able to have a checking account, and got her a debit card and a credit card when she was 16, so that she would have access to money. But I also gave limits on that. So the bank that we chose to work with allowed her to only take out a certain amount of money from the ATM. Certainly there was some limits in terms of what she could spend on the credit card, and it was all attached to her bank account. But that gave her a sense of ownership in terms of having some money that she could decide what to do with it. And I gave her a budget each month, and she writes down her budget. And so we started kind of doing that, early in 15, 16 years old, and talking about credit. I wanted her to have credit, but I wanted her to have responsible credit that she could pay off with the money that she earns from her job, rather than mommy or daddy paying it off.
And this includes using the phone. In my son's day, they did not have cell phones, but he had a girlfriend in California, and he ran up the bill to $200-300. And I said, I made this agreement with the phone company. You are going to pay for it. I did not make those phone calls. You are responsible. And after a little bit of whining and crying, getting on his knees and begging and all that other stuff, he went out and he did something about it. So kids have to be responsible. You just don't give them a cell phone and say you're on the family plan. You're doing yourself a disservice.
Right. It's and I think every parent has to understand their children and their child, not just their children, but every child may need to be taught about money a little differently. Some of them need to be able to go and feel money and have the experience of what it means to buy something, and some people can absorb it a little differently. My daughter and my son are an example of that, and I found that to be very common, is that two children in a family will make very different decisions regarding their own money and their own attitudes around money. My son, goodness, he won't spend money to save his life. My daughter, on the other hand, is more of a spender. So having a budget and having her track that is really important, whereas my son, I'm trying to get him to, recognize that it is okay to buy yourself something every now and then. He doesn't have to save it all for a rainy day. So it's very interesting to be able to observe the different behavior in your children and maybe even make different adjustments for them based on that.
So when you wrote your book, how did you set it up for women and older teen girls to use your book the best way?
So I really felt like it was important to not just write another how-to book. there's so many how-to books out there, and a lot of them have really great advice. And so what I wanted to do is kind of take a step back and really write something that would cause people to start to think about their money. And so the book is really divided up into two parts. The first part really focuses on your mindset around money, how you developed beliefs and values and goals, and why that's important, and how that influences your ability to be financially successful later on. And so I talk about that in the early part of the book, and then I mention how to have an adult relationship to money. And then we move into the later part of the book where I get more into kind of an overview, a very high-level overview about all the little different areas that you should be thinking about regarding your money. And the goal of that was to have women read through this and really get a good, kind of overview of all of these things so that they could start to be in conversation with themselves, with family members, with a financial advocate, somebody that could really start to guide them so that they could craft a plan that's very unique and specific to what they wanted to accomplish.
I also believe that there really ought to be clubs created to help girls learn how to invest their money along with annuities and what's the purpose of insurance. Because a lot of women do not understand, even with the present market being what it is, it's an act of God. You can't help that. But I believe that girls should be taught early on how to approach the stock market, how to invest in small stock, and what they need to learn about long-term investment, basically how to build up a financial portfolio. And yes, this includes eventual retirement because it does come faster. And, of course, the other thing they need to recognize is how to financially care if they have to for their aging parents.
Absolutely. That's a really big issue for, I find, a lot of women is they're in this kind of perfect storm of events where they may have children at home, maybe they're young or maybe they're getting ready to go to college, they're working and taking care of their family. They even may have gone through a life event, might be single parents at that point or having different dynamics in their relationships, and then also caring for the loved ones, their parents or their in-laws or even an aunt and uncle possibly, and having to kind of navigate that is really important. And in the book, we talk a lot about not just about investing. I don't really dive in deep to investing. I just talk about the importance of saving early and starting to get to a plan and some of the things to be thinking about there. But I do talk a lot about those protection elements that you mentioned, insurance, making sure you have advanced directives. I mean, it's unfortunate that we are living in a time where we're faced with, health challenges, and having those advanced directives in place will be very important possibly. And so kind of making sure you're not just focusing on, retirement and saving for the future, but you're balancing that with what do you need to do today to make sure you have 6 months worth of living expenses in a Liberty Fund, that you're taking advantage of the insurance opportunities you have while you're healthy and you're young, and you're doing some of those things in balance with that.
And I think it's important because who do you see working at the fast food places? Who do you see working in Kmart or Walmart or Target? Who do you see in the grocery stores? Women between the ages of 70 to 90.
Yeah. We live longer than men too, so that further complicates our kind of situation and makes it even more vital that we have really been diligent about saving for money, because we could live 5 to 10 years past our male counterparts in many cases.
Absolutely. Another thing that I think women are slow to understand is that they really do not sit down with their bank and find out whether or not they could take out a loan versus a line of credit. And this is very important. I couldn't get a loan from my bank, but they were more than willing to give me a line of credit up to, $500,000. So you need to, it's not anything I wanted, because line of credits are just as expensive to pay back if you don't have the money coming in to pay them back, plus the interest. But it's something that women ought to be a little more aware of.
Yeah. Absolutely. I mean, because those are the things that if you're not really careful, you could find yourself in dire straits. And so being able to understand the differences between those, what is secured credit, what is unsecured credit, and really reading those fine prints and being able to ask questions. I think one of the biggest things that we can encourage our young women and our women of all ages to do is to not be afraid to ask questions. If something doesn't feel right or something doesn't sound right to you, speak up and ask the questions. You have to be your own best advocate when you're in these situations.
Absolutely. And the same goes true when you go buy a car and you need to take out a loan to pay for the car. Or you're applying for a mortgage, which your financial portfolio will influence whether or not you get that mortgage.
Yeah.
And it will affect how much of a percentage that you will pay for that mortgage and how many points. And if you don't understand these terminology, ladies, please either Google it or ask.
Absolutely. And really don't be afraid to reach out and just and wait and say, no, I'm not going to be doing something that feels uncomfortable. I think that a lot of times we get this good girl philosophy where we don't want to upset anybody, or we just kind of go along with things, and that's not the time to do it. It's time. It's your money. You've earned it. It's time for you to be able to feel good about asking the questions that are important for you to understand so that you can really take control of your finances.
And the other two things you really need to consider, ladies, is one, the reverse mortgage. Because what happens is if you outlive your reverse mortgage, you will be homeless.
Yes. There's a lot of really great and new information out there about reverse mortgages. I have a very good friend that writes a lot about reverse mortgages. His name's Don Graves, and so any of his books are really great to read if you're specifically looking for information around reverse mortgages.
And also be wary of the commercials telling you about life insurance. I know you trust the guy from Jeopardy, but the fact is he's getting paid to say these things. He's not saying them out of the goodness of his heart.
Yeah, I think that buying insurance early when you're healthy and you can secure your insurability. I bought insurance when I was in my 20s and have the maximum amount of insurance that can be issued on my life, and it's all permanent at this point. I think I have maybe a tiny term policy left, and I'm going to have it for the rest of my life. And so thank God that I have that, because with the market going down, if I need money, my insurance is going up. And so I, have access to capital when I need it. I don't have to have a job to get to that money. I can make a phone call and it's to me in a few days. And so I think really understanding the role that insurance can play in your life is important. And unfortunately, if you wait until your later years to buy it, it's really going to cost you a lot of money at that point.
Or they may not issue it at all because you have a pre-existing condition. And you have to be very careful, because that's still the ugly camel in the picture.
Absolutely. And by that time, we all have something regarding our health that's probably going to require a little bit more underwriting, I guess, in order to be able to qualify for insurance. So the earlier you can secure your insurability, the better. And if it's all in term insurance in the beginning, that is great, but at least you know that you have it in case, a health issue does arise. And
one other thing that I'm sure you will mention, try to keep yourself debt-free.
Mm-hmm. Totally. I mean, there's good debt and there's bad debt. I think having home debt, if you're able to really manage, I have a fixed mortgage rate myself. I don't want to have a variable rate. But having a fixed mortgage rate and knowing that's equity that I'm building in my home, that's very different than credit card debt. I make sure that I can pay off my credit cards every month. And if I can't do it in 1 month, I do it within, 1 or 2 months, because that interest is really outrageous. I've been seeing credit cards, especially store credit cards lately, that have been issued at 29% interest. I mean, we're in a situation right now where, the Federal Reserve rate is so very low, and then yet
it's zero.
Cards are still,
they put it down to zero.
Yeah, and the store cards are at 29 and 30%. It's like nuts. So
and if you miss a payment, it's even worse.
Absolutely. So be very cautious about opening up store credit cards. The discounts you get for that moment is not worth the pain that you'll have trying to pay it off later on.
And that goes true for PayPal, which offers you up to 6 months to pay back the debt, and the first 6 months are free. Don't kid yourself. When you get past that 6 months, It's double than what you would have paid originally.
Yep. Yep. And Lillian, I think it's really important for your listeners to understand that we have to learn to, live on what we make and not be living on future money that we might make. So I recommend that people pay themselves first, save money for yourself first and then learn to live on what's left. Sometimes I think our parents who kind of operated in a cash only environment, had a lot of things right. They learned to live on, within their means. And the earlier you can develop those habits, the better off. I think that is critical to do really at any age, but certainly while you're young, is just get in the habit of saving for yourself first, living on what's left and not try to live on future money that may or may not come in. I mean, right now, as you and I are talking, our country's in the middle of a, pandemic. And we have a lot of people that don't know what the future of their jobs may be. And if they've been living on credit, they're going to find themselves with those bills piling up really fast and not maybe having the resources to pay for it. So if you don't have the money today in your wallet to pay for it, you really should ask yourself, is this something that I'm willing to put my future at risk for? Do I really need to have this today?
And not only that, before my husband passed, we always lived on what he brought home and the rest was put into the bank. And that's what made my retirement possible. Yes, we didn't go on as many trips as we wanted. Yes, we didn't go out and buy a lot of new things. Yes, I've been buying my clothes from Goodwill for the past 25 years. But guess what? When the time comes, that money was there for us, even when he was out of work for 4 years. If it hadn't been for the fact that he had saved money for a rainy day type thing, we would have been homeless. So you really have to think about these things, lady, because you do not want to put yourself in a position where you find a guy who can keep you accustomed to the lifestyle you want, because one day it may not be there anyway.
Right. Exactly. Great advice for sure.
Well, a lot of the women and some men now are looking for meal tickets. So they go after older women who already has their late husband's retirement earnings sewed up for them, and men prey on them. So you have to be very careful.
Absolutely. And, I think elder care and elder abuse is something that we're seeing rise. And so you're looking out for your family members as well to make sure that they're doing the right things and that they're not being hit on by unscrupulous people out there. Unfortunately, there's a lot of those out there. And so looking out for your parents as well as yourself and your children, it's a complicated job, but one that we are able to do because we have a lot of fortitude as women for sure.
Absolutely. So remember this, ladies, when you are independent financially, you can say to a guy like I did, which really threw them off kilter, I'm financially independent. I don't want you to take care of me because I can take care of myself. So outside of companionship, what can you offer me?
Exactly. And what kind of freedom does that give you? It gives you an enormous amount of freedom to find the person that's really right for you versus someone you have to try to be in a relationship with because you haven't got the financial resources to take care of yourself. No one should have to be in that situation.
Absolutely. So start teaching your daughters how to take care of themselves financially. And yes, it may make them very independent and even a little bit aggressive, but in the type of world your daughter and granddaughters are going to go into, they're going to need all the aggression that they're capable of mustering because the culture and society is changing rapidly.
Absolutely. And, there's a lot we can do to teach our sons, too, about encouraging their mates to also be involved in the financial discussions. One of the most frustrating things for me is when I see a man that might look out for financial advice, and it's like, my wife doesn't want to know anything about what's going on. and yet they would love for her to have a more active role
Yes.
in making these decisions. And so I think that we as women do not need to relinquish the control just because it feels scary or we're not confident or we have better things to do. We need to be involved, and a lot of men really would enjoy having their spouse or their mother or their daughter really take a more active role in finances. When I was doing some research for my book, I asked one of my male mentors, I said, what's the thing that you hear from your men out there about women? And he said, unanimously, I think all the men that I deal with would love it if their wives or their daughters or their sisters or their mothers were more involved in understanding about money. They feel like that, they want to have them be more involved. And so I think that's a good movement that we're starting to see, as opposed to men saying, we've got this, honey, just go sit down over there. We've got men that are saying and recognizing the importance of having, the women in their lives that they care about really be involved.
Absolutely. And I will tell you this, should you have a breakup, even if you're a lesbian and your other partner leaves, you need to know what's in the bank, what's your debt level, who is holding what in terms of mortgage insurance, because I got to tell you, you have to be aware of these things. The state and the federal government do not care whether you're ignorant or not. They expect you to pay your taxes and to make sure they get their share. So you cannot plead ignorance any longer.
Absolutely. It's so important, I think. And, I will tell you this too, Lillian. I think that we have to be aware of, I see this trending among young girls where they're looking and following influencers on YouTube and they're listening to them for financial advice. And I think that is a very reckless approach to have, because you have to recognize these influencers that are out there, they may not have credentials or licensing to be able to give you that kind of advice. And if you follow it and something goes awry, especially regarding taxes, it's on you. It's not on them. There's no recourse that you have. There's nobody supervising what they say. And so making sure that you're taking advice from somebody who's well credentialed and licensed is really important to do. And I see that kind of as a trend among young women. And it's a very big opportunity for us to make sure that they're not just listening to some YouTuber give advice about money and thinking that's going to, get them to where they need to be. They need to work with people who are professionals in their field.
Incidentally, I used to do my own taxes when I was single and taking care of my child, because it wasn't a real complicated task for me to do. It did require arithmetic. Without a calculator, you just use a calculator to make sure you get your sums right. But basically, it's just addition, subtraction, multiplication, division, and occasionally percentage. And we're all taught this in grade school, and if not, you're going to the wrong school. But you can fill out your own taxes.
Yeah,
unless you have a lot of investments or a lot of mortgages on a house, on a summer house, on a boat, on a car, whatever, then things get complicated. But outside of that, ladies, you really can do your own taxes without going to Hewitt or for a Block or any of those other places. It's not that difficult.
Absolutely. And, the IRS has, the ability for you to do your taxes free online. And even some of these other, like H&R Block and Intuit, look for the free opportunities. You don't have to pay to have your taxes done. Like you said, many people can do them themselves these days. But there's opportunities where you can do it online for free. So don't just think, I've got to pay to have my taxes done. Look for the opportunities. Go to the IRS.gov and look for where you can do your taxes free online. There's a lot of resources out there.
And the Small Business Administration is more than happy to help you out.
For sure.
So, Angie, we're running out of time. If there's anything you would like to add, please add it now. Otherwise, please tell everybody where they can find you on the World Wide Web, where they can find your book, and anything else you would like to add.
Well, I think the biggest thing is right now during, especially this time that we're kind of faced globally, that it's important to not get discouraged, and it's a great opportunity to kind of go back and look at what decisions you are making around your money and what do you need to do now, next, and later. You can certainly find me at andefrazier.com, or you can go to myworthfinance.com, where we have an enormous amount of resources available for women to read about and really dive into some specific categories of money that might be pertinent to them. And my book, Financially Free, is available on Amazon, Barnes & Noble, Apple Books, all major book sellers. And so I encourage you to go out. It will give you some really great things to be thinking about and some great opportunity to have some discussions with the other females in your life of all ages.
Thank you very much, and thank you all to listeners, ladies and gentlemen, and children of all ages. You can hear this interview all over again with Ande over at https://passionateworldtalkradio.com. Right-hand side of the page, menu, scroll down, Cool Your Heels, click on it, and voila. For those who are technologically challenged, there is a sizzle line. Go look up for Sizzle Line. You'll see a phone number. Call it up, and the interview will unfold from there. You can also hear it on amfm247.com every Tuesday evening from 8 to 9 p.m. After the .com/Lillian Cauldwell, and it'll take you there. You'll also hear it on Spreaker, Spotify, ALEXA, also on Podcatcher, Podchaser. We're heard in numerous places. Before you all go away and stray, Sir Francis Bacon had this to say in 1597, books will speak plain when counselors blanch. Thank you all very much for listening, and remember, until next time, have a great day. Bye-bye.